welcome to online class. My name is Ojo Babatunde Ho. Today we are going to be discussing the topic in agricultural science, farm records. Farm record refers to the written document of all the activities going on in the farm from the beginning of the farming season to the time when the products are sold. What are the importance of the uses of farm record? Number one, farm record helps the farmer to know whether he's making profit or loss, thereby making necessary adjustment. Farm record help the farmer to know whether he's making a profit at the end of the farming season. Number two, proper record keeping facilitates efficient management decision. When the farmer keeps record of all the activities that happen in the farm, it enables the farmer to take a certain decision whether to increase the production or to change certain thing in the farming business. So that's one of the importance of a farm record. It enables the farmer to take decision. Number three, it helps the farmer to reduce the cost of production. If you remember in our previous class where we discussed pricing and advertising while in class, I told you that the cost of production is a major factor that affects the price of agricultural produce. So when a farmer is spending too much of money in producing a particular product, the cost of it is that the effect of it is that it's going to thereby increase the price of that product. When the price of product is too much, it may affect demand. So when the farmer is spending too much of money in producing a particular product, so it has to reduce it. How would he know he's spending too much? Is by taking record of all his spendings, taking record of every activities that has taken place in the farm. So it enables the farmer to reduce the cost of production. He knows whether he's spending too much or not from the record. Number four, it exposes the farmer progress, thereby helping him to obtain loan from the bank. When the farmer is making a huge progress from his farm, he's going to know that from the record. So from that record, he can approach a commercial bank for loan in order to expand or increase the farming business. Number five, it accepts the farmer to know the aspect of the farm that is yielding more profits so that the farmer can invest more in that aspect. When the farmer have a record of what is going on in the farm, a particular section of his farm, maybe for instance the man is making investing in crop production or animal production. If he realizes that he's making more profit in animal production, so he can invest more on that because that is the area that is having more returns for him. For instance, if the farmer keeps birds, layers, he's selling more eggs. So if he realizes that he's making more money from selling of eggs, that he can invest more to increase the size of birds that lay eggs. So that's one of the importance of a record. Then number six, it enables the farmer to make accurate returns from the Board of Internal Revenue for tax assessment of tax. So if the farmer keep record, it enables him to know the amount of money he's going to be paying as tax, because there's a percentage of income of interest which is paid to government as tax. Okay. Number seven, it furnishes the farmer with necessary information. It furnishes the farmer with necessary information. So when the farmer keep record, it's enabling you to know everything that is going on right in the farm for general administration, planning and budgeting. So what are the information that the farmer requires? When he have adequate information concerning his farming business, he can have a future plan, he can have a budget of what to do to increase his production, his farming business, which is one of the importance why a farmer keep record of everything that happens in the farm. Now let's go to the type of record. What are the type of record a farmer can keep in his farm? There are different records. There are different type of record are kept by different farmers depending on the nature and size of their farm, depending on what the farmer is producing, be it in crop, it can be crop production, it can be animal production, fishery. So the type of things the farmer produced to tell the type of record the farmer can keep. Now let's go to this type of record. Number one, we have farm diary, farm inventory, input record, production record, consumption record, sales record. These are the example of record, type of record that the farmer can keep in his farm. So this record are very, very important for the farmer to keep. And number one, farm diary. This is the record of activities going on in the farm on daily basis. It is a record of day-to-day events in the farm. This farm diary is very important because it's a record that shows day-to-day events, everything that happen in the farm daily, day to day. If things happen in this farm today, the farmer will have to take a record of it. If it happens tomorrow, it have to take a record of it. So everything that happen per day, day to day, day one, day two, day three. So the farmer have to take record. So these things are recorded in what is called farm diary. For example, date of planting and germination, date of purchase of machine, date of application of fertilizer and insecticide. All this, the day you go to the farm to plant your crop, to harvest, you purchase a machine, that date and the event that take place that day must be recorded in a farm diary. Farm diary can be referred to any form from time to time. You can refer to farm diary from time to time to see whether some activities have been completed or not. It is a good reference book for information about the farm. That is, you can make reference to it on that day and things that happen. In the farm diary, it must be computed in a tabular form. First column, you have the date where the activity take place must be clearly spelled out. The activities that take place on that day must be there. Planting, you can see on the 24th 8 2023, 24th of August. So the farmer planted what? Groundnut. So the labor, 5 laborers at what? At the cost of 1,500. So the quantity, 2 hectares, the size of land, 2 hectares of land. So these are the record of things that take place on 24th of August 2023. It's a typical example of a farmer diary. Then second record is a input record. Input record refers to the record of all input invested in the farm in a year. Such items include day-to-day checks. So this input record, everything that you introduce into your farm, just like the word input, the things you introduce or bring to your farm, everything you bring into your farm for one thing or the other must be recorded in this input record. So it means the farmer is running for instance animals feed, fertilizer, insecticide, seed, the everything must be included in the input record. For instance, if you have chicks, you get chicks into your farm, the number of chicks, the date, everything must be clearly spelled out in that particular input record, the quantity of fertilizer bought and the price, the seed, fertilizer, all these things are farm input, things you put into your farm. That's what they are called farm input. So the quantities, the date must be clearly spelled out in the input record. The profit and loss incurred by the farmer cannot be ascertained except accurate input record are kept. If you do not keep accurate input record of things that you introduce into your farm, you can never get the accurate profit or loss account to determine whether the farmer is making profit or loss at the end of the production year. If the output of the farmer is greater than the input, then the farmer will make profit. Please take note of that particular point. It's very, very vital and important. If the output, what is the output? That is what the farmer is getting out of the farm. Okay, the gain, the revenue, the profit is making out of the farm, if is greater than what is taken in, okay, that means the farmer will make what? A profit at the end of the production year. So conversely too, if what the farmer is taking out of the farm, the output is less compared to the input, that if the input is higher than the output, that means the farmer will eventually run at loss at the end of the production year. As you can see, the input record, the date 2010 20, and you can see then the what is done on that day. Please take note of that. Then we have another record, production record. This is the record which shows all the things produced by the farmer. This production record is very, very important. Everything that is being produced in the farm will be recorded in this production record. It's a record that contains everything that is produced in that farm. The date of production, everything must be recorded in this production record. It includes the quantity and the type and things. The typical example of production record, the date, 32nd July 2022, what is produced maize, the quantity of maize that is produced, 70 bags of maize. So that is that. Then we have another typical example of farm record. This is the farm inventory. This farm inventory is a record of all the assets of a farmer. It shows the properties and the resources owned by the farmer in a particular period. This farming inventory is very important. It shows all the assets, all the properties that belong to the farmer, which you use in running the farming business. So these things are referred to as inventory. Such items include the number of animals in the farm, produce in the store, farmland, and their value. So when you want to get the inventory of a farmer, the property he owns, and you must know the monetary value, because everything together will tell us the worth, the monetary worth of the farmer. Okay, then the farmer should list them in item here, depending on their value. Like I said, their monetary value is very important. When monetary value is attached to all these items, it shows the farmer net worth. The net worth means the asset, the monetary worth of the farmer. Maybe 2 million naira. By the time you add all the assets, the property that belongs to the farmer, be it the number of stock, the animals in the pen, the size of land he owns, what is the value of that land, maybe 500,000 or 2 million naira, the building, the pen. If you sum everything together, the worth, if by the time you sum everything, is now about 500 million naira. That is the monetary worth of the farmer. Okay, farm inventory taken once or twice in a year, depending on the nature of site. Then consumption record, this is the record of the farm produce consumed by the farmer and his family. This consumption record is very important. If a farmer keeps an animal, for example, you have a poultry, in that poultry, the birds lay eggs, you sell the eggs every day to the people. Now, part of the egg will be consumed by the farmer and his family. Maybe, for example, you want to eat egg in the morning, you can go to the poultry to get 2 or 3 or 5 eggs. Now, those eggs that are consumed by the farmer and his family will be recorded in the consumption record. So, consumption record here refers to the items that are consumed by the farmer. Okay, farmers should determine their current value, the current market value. The importance of consumption record is that it enables the farmer to know how much is consumed and to take into account when preparing for the profit and loss account. So everything that is given out, okay, please take note of that. Everything the farmer gives out of the farm, maybe you give 5 crates of eggs as you give maybe to your pastor, to your friend. So all those things will also be recorded in the consumption record. Please take note. It's a very, very vital point. In consumption record is very important. Things that are being that should be included in the consumption record are things that are consumed by the farmer and his family, and things the farmer gives out willingly to people, maybe to friends, to pastor, anybody as gift. Okay, all these things will be recorded in the consumption record. It can be kept daily, weekly, or monthly. Then we have the sales record. This is the record which shows all the sales made by the farmer. Everything sold out of the farm, okay, to the public, okay, will be recorded in this sales record. Okay, this record shows the income, okay, of the farm. When a farmer makes sale, he realizes the income from his farm. Such income can be compared with the total expenses, okay, incurred in the running the farm as to determine the profit or loss of the farm. So what all the meaning of that is that if the farmer at the end of the production year is going to add everything that is recorded in the in that particular record. Okay, that is the same record. That is things that been sold out. You go to collect certain revenue, you know them, you sum them. So that is things that come into the farm. So it's going to sum up everything that he spend money on in the course of the farming business. So by the time you do the subtraction, it's going to know whether it's making profit at the end of the year. Sales record may be kept daily, weekly, monthly, depending on the time of sale. You can sell things today, you can sell it in 2 days' time. So things are being sold in the farm, they must be documented and be recorded, because sales record is very, very important in the calculation of profit and loss to determine whether the farmer make a profit or loss at the end of the production year. Then we have the profit and loss account. This is the record of all the sales and expenditure made at the end of the year to determine the profit or loss made by the transaction, including all the purchases and sales made throughout the year in the simple account. And the meaning of this is that it is record of all the sales and expenditure. What is the meaning of sales and expenditure? Sales refers to what the farmer sold out. Like I said in the previous minutes ago, that in the sales record, that it things the farmer sold out. Okay, maybe it can be chicken, it can be eggs, it can be harvested crops, it can be yam or cassava. Things that are being sold out, the farmer will record it and a sales record. So now the thing the farmer spend money on, maybe the farmer bought chicks, bought fertilizer, maybe he bought chicks feed, okay, all the things the farmer spend money, use money to buy in the course of the farming business, the farmer will call that is expenditure, things to spend money on, expenditure, okay, they are call it expenditure, things to spend money on, okay, and things that brings money into his account. Okay, he's going to add everything up and do the subtract. It's very, very important. And this account shows whether the farmer is running at loss in the farming business or is making a profit. And when calculating this profit and loss account, the farmer have to collate all other record, be it production record, sales record, and other record. He will put them in this profit and loss account to determine whether it's making profit or loss. And one thing that is peculiar about the profit and loss account is it's usually calculated at the end of the production year. Okay, on the other record, profit and loss accounts are not done weekly or monthly. It is at the end of the production year. Maybe you can do from January to July or September. That can be the production year, depending on what the farmer is producing. This production year doesn't mean January to December. Depending on what the farmer is producing, it can be from January to June or September, depending on what the farmer is producing, maybe crop production or animal production. So profit and loss account is usually calculated at the end of the production year. Okay, then we have assignment. Then this assignment should be done and should be sent to me via WhatsApp. What is farm record? Outline for importance of farm record, explanatory type of farm record. This assignment is very important. I'm looking forward to receive the assignment and to see you back in school. Thank you and have a nice day.